This is Rod Kusanen, Spooman for Risk. It is Tuesday, September 6, 2011. All times on the chart are Central Standard Time. We have been making some further adjustments in our strategy, and we're now going to be documenting our equity curves for the new strategy. And we're running this strategy against a modification of it using Jurek stochastics, all thanks to Mark Jurek. And what we're going to quickly do, first of all, is just to show you the differences between the equity curves on two identical strategies, one using a Jurek stochastic in certain aspects of the strategy versus a standard TradeStation stochastic. Now, in the first strategy chart that we're going to show you, which is on the screen now, we're showing roughly 17 trades, and we had marginal results until mid-morning, and then things began to take off, and we did marginally well. Now, the next chart I'm going to show you is the identical same settings, but the only difference is that where stochastics are used in our strategy, we're using the Jurek math. Here's the difference. Now, we have quite a few more trades on this chart. Now, unfortunately, I made a little bit of an error earlier. I allowed this thing to run overnight, and we didn't really open until right after the 20th, about the 23rd trades here, right when that drawdown occurred. That was right at the open, so we can pretty much discount that run up that occurred overnight. We should really be starting from about here. So we basically need to take roughly $800 away from this equity curve. But the point of the matter is, the Jurek, while we had more trades, we definitely had a much better equity curve using Jurek math. Let me show you the second strategy chart. Now, in our second strategy chart, about the same number of trades, but a much better equity curve. A little drawdown at the beginning, but then we began to improve things quite a bit and made a nice profit by the end of the day, about 15 trades. Next chart I'm going to show you, same situation, identical same settings, Jurek stochastics substituted for TradeStation stochastics, and it also was running since the earlier part of the morning, but we'll show you where that breakoff was. So right in here, right at the beginning of the day, about 20th, 22nd, 23rd trade, that was that little drawdown that happened right at the morning, and then off she ran. So really, from this point forward, that was a nice climbing profit, steadily increasing through the course of the day. Not a huge difference between the first graph and the second graph, because there really wasn't that much of a difference between the settings. Now we'll take a look at the third situation, and then I'll talk about the differences. Now here was the third strategy, and that strategy really didn't make a profit during the day. Now there's something significantly different about this strategy, which is not something that we will likely continue to use. I'll describe that difference in a minute. But when we substituted the Jurek stochastics, here's what happened. Very nice. Nice profit. Nice steady upward move of the equity curve. Now, All this having been said, what are the differences? Well, number one, we can obviously see, at least for this particular day, we're not going to draw any final conclusions about matters, but I think we have a very good-sized case for maintaining the use of Jurek stochastics in our formula. Now, when we take a look at the differences, there really are very little different. There's very little difference between chart number one and chart number two in terms of its activity. There are some differences in the settings, but they're not very significant. Here we have just a few nice profitable trades that came up, but they were set to exactly the same settings with one exception, and that's how we determine divergence. One of the special aspects of the strategy is that we're using divergence in all of our configurations. And the formula that we use for divergence is very simple, but it's enabling us to really capture these minor pivots, I would say, and capitalizing on those pivots. The third chart to the right uses a much more significant difference between the type of divergence being used there and what is being used in charts 1 and 2. You asked for a demo. We'll go into the details on that. But nevertheless, the point of the matter is that through the use of our divergence formula in conjunction with our Jurek stochastics and the various data feeds that are going into our formula, we're seeing some very, very nice results due to the fact that we've just made a few simple changes in our approach to things. What we want to be able to do is make sure that we're trading in the direction of the trend. And the Jurek stochastic is really helping us to do that. So I'll give you a little insight into our formula here. Now on the bottom subgraph, I know it's a bit hard to see, but we're running a VIX stochastic using the Jurek math. And that nice short trade that took place up here is taking place primarily because we know that the VIX is short at the moment. And we're not getting much in the way of whipsaw. Now the VIX, as you can see, has gone long. Our formula doesn't take us into a long trade until here. Both profit targets are reached and there's still much left on the table. And we get a move on the short side right in here, but there's not much activity because there's not much in the way of divergence. On the other hand, when we start going long again, we get another divergence, but it's just a little bit early and gets stopped out. Let's look at a little bit later on during the day. Now here we are in the afternoon. Now look at where the VIX is. The VIX is, at that particular time, VIX was short. Okay, the VIX was short. So we get a short trade that gets stopped out. Later on, the VIX is turned long again, actually starts going long right in here, and we finally get our first tradable condition right here. That hits its profit target and leaves quite a bit on the table. This gets stopped out. We're running into just the latter part of the afternoon where the VIX really isn't operating any longer. So the point of the matter is that we want to trade in the direction that the VIX is telling us, and we like the use of this stochastic. I really, really like it. Now in the videos that you're going to see in the next few days, you're going to see a lot more activity. This is really our first day of publicizing the results here, but we're very, very encouraged by what we see happening here. So look forward to watching our videos in the days ahead, and be sure to contact us if you want a demo. We'll be happy to explain things in much greater detail than we can go into on these YouTube videos. But we've definitely got a winner going here, and we're looking forward to some excellent trading results in the days ahead. So come to our website, rsksys.com. Give us a call, and we'll be happy to go into further details. We'll be releasing information onto our website in the near future. There's not really much on this adjustment right now, but you'll be seeing more about it in the days to come. This is Rod Kusin and Spooman for Risk.